Good morning, friends. Early start today. I hope your Saturday has started well. Now, this is a technique that uses a tendency of the market, and any technique that uses a tendency of the market becomes very, very potent. And in that, I have included my own variation. And let's first go on the whiteboard and understand the logic. Now, basically, 80% of the time, the market reverses from extremes, at least on an intraday basis, and comes back to the mean. This sort of trend day is a 20% event. So, by definition, you have a system. Okay. Now, what kind of reversals can we play? In my experience, on an intraday basis, R2 and S2 are those 2 points where reversals are very likely. Now, what are the different ways this can play out? You will often see the market opens and starts moving up very sharply in the early going and reaches a certain resistance. In this case, we would say that a minimum of R2 should be achieved, and then it reverses, and often it makes a double top and starts to come down. Now, why is this R2 important? This is important because you need something to reverse. So hence, this is my variation that if you have a sharp rally right at the open, the odds of continuation are low. They are there, but the odds of continuation are low. Similarly, if you have an early morning strong decline which almost gets to S2 or even past that, the odds of that decline reversing are 80%. Okay. Now, what could be the other variations of this? Say you have a day which is a trend day, keeps rallying, 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 and closes at R2 plus, which means higher than R2. Now, on the next day, if the market goes towards R2 or opens at R2 and immediately starts to reverse, in my opinion, this is the other way a reversal can play out. Obviously, at this point, you have to look for price action, which means you have a strong bearish bar and your stop is above this R2 zone and it comes down. Similarly, if a market closes at the low of the day on day 1, day 2, you go back and retest day 1, because often what you will see is that on the next day you gap up and then you come towards this S2 zone, and from there you reverse. See, both these things can happen during the day also. Okay, like the market is trading, and around say 12 o'clock, etc., you reach R2 and you reverse. But in my opinion, the best time for this is 9 to 11 and 1 to 3:30. Because in the middle of the day, the market becomes very choppy and flat. Now, what is the money management implication? Basically, once you are at R2 and you start to get some sort of price action, okay, you put a stop here and either it starts to work or 20% of the time the market starts to trend and it takes you out. Okay, so this is how your stops get managed. When it works, it goes down and gives you a large move. Now, before we get to the examples, let me say that you can join our services under the join button, where silver, gold, and diamond services are available. Also, you can opt for a recorded webinar, which is available for 2000 plus GST. So both these types of services are available with us, and ones that will be useful for trading, because we keep posting a lot of charts and what sort of thinking we are having on the market. So those sort of facilities are available. Now let's go back and see some examples on a day-on-day basis, because the market will not get to R2 or S2 every day. So if it does not go there, there is no trade. So if this happens in the middle of the day, which means if this happens in the 11 to 1:30 zone, then maybe I am not as keen. But 9 to 11 and 1 to 3:30 is the time when you are looking for this sort of reversal. Now, one of these stops can form before 1 o'clock and the second can form post 1 o'clock, that is fine. But if both are forming around this middle part of the day, then the odds uh, possibly drop a whole lot. Okay, so now let's go back to our examples and see. Okay, now this is 11th of December, which is yesterday. Now, yesterday, let's see what our R2 was. Yesterday, our R2 was 13,564. Okay. The high of yesterday was about 13,574. So you had R2 at 13,564. The market hit highs of 13 uh, 13,574. So as you can see here, it went up, made one peak, then made a second peak, and then started to fail on you. Okay. So the moment we made this second peak, you could have taken a 50% position here, added as we broke this zone, and finally, as you can see, the reversal played out. Okay. Obviously, in ranging markets, reversals work better, but even in trending markets, as we'll see, they work very, very well. Now here, let's see on the 10th of December, did we get any S2? Here again, the market came down and almost got 11,398. Okay, and it stayed here for a lot of the day. Then second half, you had this big move, and which was almost 100 points on Nifty. Any sort of option would have worked very well. So again, 2 days, two reversals exactly from S2 and R2. Now here, this is 9th of December. 13,503 is our R2. Okay. So early morning, we went to R2, but we started to go flat. So let's assume even if you took a trade, once we started to break through this zone, your stop was taken out, and that was the end of the matter. But overall, you shouldn't have done it because you have no price action confirmation. So this is the 20% of the time that this thing happens. Okay. Now we come to 8th of December. 8th of December, we have R2 at 13,446. So early morning we went up, and the high here is about 13,436, just about. So you played for your reversal, and immediately the market came down 80 odd points. So this was a reversal which was achieved. Some days will be better than others. Then we had 7th of December. 7th of December had R2 at 13,358. R2 was hit, I think, around here. But even if you went short here, although it was in our time zone, you made something, but you don't have price action. As in, what I like to look for is some sort of double top. There is no double top here. So this would not have been taken, because double top is important in creating reversal or some sort of a wedge pattern on the downside or on the upside, from where you get your sharp move. Here, I don't think either was available. So this was not our day. Plus, remember that we are dealing with an extraordinary trending market. But still, this is a very, very useful technique. Now we move to 4th of December. So 4th of December, your R2 was 13,261. This level is 13,250 thereabouts. The high that you got is about here. So again, this is one high, which is 13,248. This is the second high. So in case you took that R2 play, because this is well inside your zone. So if early morning R2 is hit, you take the reversal trade and the market reversed from 13,245 all the way back to 13,149, a 100-point reversal. Now let's go to 3rd of December. 3rd of December, your R2 for that day was 13,218. The high of this bar is 13,216. And if you went short here, you got your play on the downside, because it came down to 13,110. And this is an extraordinarily trending market. So, it's not easy for these markets to reverse. Now we are going back to 2nd of December. 2nd of December, since we are going down, our S2 was 12,900. This is about 12,980. So we haven't gone to our criteria, although there is price action here. So this is a rejection. But something else happened. 1st of December, this is data for 1st of December, 13,093. So we had closed beyond R2 on the 27th. One second. 1st of December, yes. So 1st of December, R2 was 13,093, and we have closed beyond it. So next day, when we opened here we had our match because the previous day had closed at R2. So that criteria was matched because of the previous closing. So we opened exactly at previous day high and the reversal started to take shape. So our pattern worked out here. Now let's go back to 27th of November where things are quite range bound. We never got to any S2 or R2. So this was a day where you didn't get any play. Now let's go to 26th of November. 26th of November, since 25th of November was a day where you probably did S2. 25th of November, we have to see data from the 24th. 24th we had 12,942 as your S2. Okay. So on the 25th, we had gone beyond the S2 which was slated for this day. So on the 26th, what we are looking for is some sort of reversal which goes beyond this S2 day. Okay. So there was nothing to do here, but you had to keep your eyes trained that as soon as the previous day low is crossed, the market could reverse and you got a very good reversal. As you can see, you have 25th of November, so we can have a look at this day also. 25th of November, for that day, we had a R2 of 13,130. We have opened almost exactly at 13,130. So we opened beyond R2 and immediately started to reverse and went till S2. Okay. So there were these two trades which were setting up. The morning you could have gone short, and in the afternoon, by virtue of closing at the lowest point, you set up a trade for the next day. Okay. Now we have 24th of November. Here I don't think we got to the R2. R2 is 13,046. Okay, this is the R2. But here, A, there is no price action. B, even if you did something, a small stop above this zone would have been hit, and that would have been the end of it. So basically, the moment you start to see R2 or S2, the odds of reversal are very high. Now let's look at this day, 23rd of November. 23rd of November, we had R2 at 12,989. So we have opened around the R2, but not exactly there. But gap ups by definition should be sold, and this gave you a 200-point reversal. But you can debate about the R2 not being hit by 30 points. But I would think if this is a strong gap up from 859 all the way up to 959, gap ups are often sold into. Okay, we can do this with individual stocks. We can do this with Bank Nifty also, because Bank Nifty particularly does a lot of days where it goes up sharply and then reverses. Now, yesterday we had one such reversal. Bank Nifty yesterday R2 was 30,849, and you went up till 30,800 and 810, 20 thereabout. So not really hit R2, but fairly close by. So that way, maybe you could have taken it, because you see the risk reward of these trades is so high that when they work beautifully. Let's look at Bank Nifty for 10th of November, which is the day previous to it. On this day, our S2 was 3133, and I think Bank Nifty went down to 3207. See, 50 odd points on Bank Nifty, this sort of margin you'll have to give. So here again, the S2 got reversed and you rocketed back 300 points. Okay. Now this is that play that I spoke of, where the R2 is hit on the previous day. So here, this is, I think, 9th of December. So we have to look for data from the 8th. Okay, so 8th of, we have to look for data from the 7th. Okay, 7th R2 was 3576. Okay, one sec. This is 9th of December, so 3554 is R2 for 9th of December. So you have gone beyond the R2. It was a trending type of day. So the criteria has been matched here. Now what happened here was, you opened gap down and immediately you started to have a reversal. You can't say it is reversing today's move, because on this day, 10th of December, you gap down. But what it's reversing is this move here. So you can think of this as a bar which is starting from this close level. So you are basically trying to reverse this. So I think things should be clear by now. See, the logic of this method is very strong. And what is that logic? That on an intraday basis, and maybe on a swing basis also, if things get way overextended in one direction, the market reverses back to the mean, or it starts to trend. The trending part is only 20% of the story. So 80% of the time it reverses. But you should have something to reverse. So we need a minimum criteria of a market rally. so that we can play for that reversal. So I think this should be enough examples. You can spend the weekend looking for more examples, but overall, this should be the gist of the entire story. And once we are able to get conviction, you can build on volumes. This is particularly very useful for weekly options, because in weekly options you tend to get very brisk moves, and these sort of reversals create that. So that should be it. I hope you have a good weekend, and take care. Trade well on Monday.